This is Tim from JHomes Real Estate Group. We hope you are keeping well under this unusual and obviously very difficult environments. Welcome you to this webinar where we hope to provide you with good information and resources that you can use in the future. Today we're going to talk about the impacts of COVID-19 in the mortgage industry. And we have Dennis Ng here from Clear Trust Mortgages. Dennis, thank you for coming online and taking time away from your busy schedule.
Well, thanks, Tim. Thanks for having me, and really appreciate you allowing me to speak to your audience.
So we have quite a few questions for you. One of the questions that we get from our clients is, with the ongoing COVID-19, have you seen any changes for your lenders, in specific to in regards to the employment, especially upon verification upon funding?
Yes. Okay. Let me answer that in two parts. Okay. If you have already received an approval from a lender, a lender may or may not re-verify the employment prior to closing or prior to funding. So prior. So I'm talking about like 5 days prior to funding. Okay. But for those who enter purchase contracts and they're requiring subject removal, the lender will take extra steps to verify your employment. So that could also entail maybe doing some research on the employer, or doing research to the business, and maybe perhaps asking, further income verification, such as maybe 2 months or 3 months bank statements to show that you're receiving the income that you're declaring.
The second question for you, Dennis. So usually we take about 5 to 6 business days to remove our subjects. But now what we're hearing is lenders are taking extra time to do their due diligence. So in that way, we have to, is it preferred to have 10 business days for our buyers to remove subjects?
Most definitely. And I can tell you, as previously discussed, employment is the one reason why it could be potentially delayed. Questions about the business or the source of income needs to be, further due diligence needs to be done. The second reason for potential delay is that potentially the value or the appraisal value that needs to be either done through an appraising company or potentially through what we call automated valuation by the lender, or computerized appraisal, may come in lower than expected. The appraisal potentially could come in at 3 different values, and it could come in much more conservative than what the purchase price would be at. So those things would delay the potential, the subject removal. So to have that extra time these days would be very, very important.
Another question for you too, from one of our clients is, especially now with the popular topic that's floating around about the issues with regards to deferring mortgage payments. Should we be deferring mortgage payments right away?
My opinion of mortgage deferral is, first of all, you have to know what it actually means. It actually means the delay of a mortgage payment for whatever term, that could be 3 months or 6 months. And you have to understand what the implication would be too as well. The implication is that the mortgage payments are actually deferred, and the payments are actually added to your mortgage a term or mortgage amount. So potentially a deferral of 6 months could mean that those payments would be added to your mortgage, therefore increasing your actual mortgage payment amount.
Interest upon interest, right? So this...
Correct. That's right. So you never made the payment. Yeah. That's right. You never made the payment, but the lender is going to make sure that they collect on the payment. And so they're adding the payments to the mortgage, which in turn would increase your mortgage payment after the deferral period is over. Okay. The other part I think is very important too as well is that Generally, they give you terms and conditions of the mortgage deferral. And sometimes my concern is that if the mortgage deferral is not properly recorded with the credit bureau, it could actually affect one's credit because it could be recorded as a delinquency when in fact it's a mortgage deferral. So that's very important for people to know that if they do take on this process, that they should make it clear and have everything in writing to proceed on the mortgage deferral.
Okay, that's actually good to know. I think it's good to know for the audience before they jump ahead and do the mortgage deferral. They should talk to you or to any of their mortgage specialists before they do any changes, right?
Correct.
So, hey, you know what, Dennis? Is there anything else you want to share with the audience?
Yes, definitely. I feel that it's this time, we are in much different times than before. I mean, the expectations of quick approvals and whatnot are sort of different. So what we should be looking at is allowing as much time as possible to ensure that we complete on your mortgage. The second thing is I think it's important to know that as a mortgage broker, we've adapted to this situation by giving our borrowers options to complete our applications online and without actually having to meet with a mortgage specialist or a banker. What makes us unique is that we also have access to different lenders. And if your borrowing situation doesn't get approved at one bank, we can approve it at a different bank too as well.
Okay. You know what, Dennis? We're going to thank you for your time for coming today. If our audience have any questions at all, please leave a comment below. Myself or Dennis will definitely will answer your questions. And Dennis, thank you very much. And stay safe.
Stay safe. Thank you.
Stay strong.